Hello, everybody, and welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind that all trading has risk. I think we understand that. You just want to make sure you manage risk in a way that makes sense for you, and we'll go over some ideas in that regard with some tools that make it quite a bit easier to risk manage on our web trader and AvaTrade Go app. Now, also keep in mind that what we cover is not meant to be financial advisement, but it's coming from an educational perspective. Starting from our main website, we can access our web trader, which allows you to trade on both your MT4 and MT5 accounts. Also, you can utilize our app, as I alluded to, which is found in the major app stores, Google Play, Apple App Store. And you can follow these links to take you to it if you wish. And the same tools that you'll see in our web trader in this session, whether it's the signals, the market news, the advanced economic calendar, etc., things that we cover in the fundamental webinars as well. All of those tools are in our app, the same as they are in the web trader. And so MT4 and MT5 trading without having to switch platforms makes it quite a bit more convenient than trading on those MetaTrader apps and platforms, which are separate from each other for the different account types. Plus, you have the advanced functionalities that our platform and app offer. Now, if we log in here, then in the upper right, we'll be in the WebTrader platform. And I know our primary focus is technical analysis in this webinar, but it always helps to think a little bit about what's going on with the fundamental news and the sentiment for the day before you get into trading. Now, today's an earlier close on U.S. markets because of the 4th of July holiday. U.S. markets are closed tomorrow, but then it's a huge day on Friday for U.S. announcements. It's the non-farm payroll, along with a slew of other data that comes out along with that each month. So it's a really big day in terms of how the markets will view the current environment in the U.S. economy in terms of inflation and economic strength. And so as we lead up to that data release on Friday, we got some early data today, what's referred to as the ADP, Advanced Data Payroll, out of the U.S., which is kind of a sneak peek at how healthy the job hiring has been before the actual numbers come out on Friday for the total non-farm payroll hiring numbers. And so what the advanced data payroll showed is that the hiring was much weaker than expected. It was already expected to slow down, but came in much weaker than that, along with some other data that came in out of the U.S. that was also worse than expected. And real quick, if you're not paying attention to economic announcements before doing your technical analysis, it's probably a good idea to maybe take a peek at the economic calendar. And we get into more depth how to use this economic calendar in tomorrow's session, my fundamental analysis webinar. But real quick, I'll just show you the announcements that occurred today. And if we put it on today's date, let's see, we're July 3rd now, so we want to get out of June and go to July and make sure we're on the correct date, and then we can scroll down. And so there were a lot of announcements that came in today, and what we see are still to come tonight. FOMC minutes. Okay, the FOMC committee is the group that helps determine monetary policy in the U.S. And so it'll be interesting to see what those minutes show in terms of what was discussed in the past. And we take a look at factory orders coming in today, expected to drop from an increase to a decrease, and they dropped further than expected. We see PMI data dropping further than expected. Anything below 50 is considered not so good. Inflationary data starting to show that the high interest rates in the U.S. are working to kill inflation, with numbers coming in not only dropping, but dropping more than expected. And we can go to other numbers that came in today that also were worse than expected. The advanced data payroll, these are the employment numbers I was speaking of. And we've got initial jobless claims coming in higher than expected. That's bad news. If initial jobless claims, that's people who don't have a job, that number coming in higher than expected. The advanced data payroll showed a drop from the prior numbers from 157 to 150, but actually not as much of a drop as the prediction. So that's the one data point today we can look at out of the US that didn't come in worse than expected, but still shows a slowdown. And these other numbers, like I said, came in worse than expected out of the US. And so you can look at this and just get a feel for the sentiment on the day. And if you've paid attention to how the fundamental news has affected the technical analysis for different instruments, we tend to see bullish moves on the equities, on the major indices, and even on some of the commodities, depending which ones we're looking at, gold being one that lately has been bullish when there's bad news out of the US, okay? When there's worse than expected economic data like we had today. And you might think, well, why would the equities go up if there's worse than expected economic news? And the fact is, it's because there's an increased expectation then that interest rates can be lowered, okay? If the data is really showing a slowdown greater than expected in the US, then there's happiness that, hey, interest rates maybe can come back down now. And so I bet there's a bit of that optimism on the market now today with the data that came in. Okay, we'll see how that carries over to Friday with the non-farm payroll numbers, and there's GDP numbers and unemployment numbers, unemployment rate, etc., coming in on Friday out of the US, not to mention the announcements from other countries that are coming in as well between now and then. And so that's been the field today. We'll take a look at some of the signals now, look at the technical analysis, and see what makes sense based on the fundamental news as we know it. What technical analysis maybe would we want to go with? And so one thing we can look at is gold. What happens with gold if there's an expected weakening of the US dollar? Well, a safe haven that many times traders run to when there's an expectation of a weak currency would be a safe haven like gold. And so if the US dollar can't be the safe haven, which sometimes it is acting as a safe haven currency when there's fear, but if the fear is, hey, they might be lowering interest rates in the US, which would weaken the USD, then where do you run to if you think there could be a weakening USD? Perhaps to stocks or perhaps to gold, okay? And so if we then take a look at, well, what's happening with gold today? The one-day candles show a huge climb on gold. Okay, this is today's candle. And if we want to switch to smaller candles, we can see the run up on gold. Okay, this really accelerated when that data came in earlier today. Okay, when we saw a few hours back that those numbers were not looking good, the PMI numbers showing a greater slowdown than expected, the initial jobless claims being higher than expected, all of that kind of showing bad news for the US economy. USD weakened in response to that, perhaps because of expected interest rate decreases with that type of slowdown in the US. At some point anyways, they're expecting maybe one interest rate decrease even this year still. But that helps, at least temporarily, things like gold or different stocks to climb against a USD that could be a bit bearish with that kind of news. And so we do see this strong climb then with gold. At any point, you understanding the economic calendar, knowing that that kind of data was coming out of the US, you could have found a resistance level at any point. And I'll draw lines where I see two of them, okay? This was a resistance level going into last week, then carrying into this week, resistance, 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 right around 23.39, okay? Once this broke above, you could have had a pending order right up here. Knowing there's big news coming, knowing that non-farm payroll is this Friday as well. Okay, pending order above the resistance to buy. If it breaks through the resistance, it would have triggered here on this candle. Okay, and then you'd have been off and running with the profit. If you missed this breakthrough, you saw hesitation here, resistance, resistance, resistance. Draw your resistance line like I did here. Put your pending order to buy if it breaks that resistance. More economic data came out, weaker than expected again, and breakthrough, and up goes gold again with a weakening US dollar. Okay, so this is a very simple process that you can do. Now, perhaps after all this climbing, there could be a pullback. So at this point, if you say, okay, I think the US dollar could be weak leading up to Friday, but I don't like the entry point maybe, if I wanted to perhaps buy on gold as an example. So maybe I would say, I'll put a pending order down here. If it pulls back to what should be a support level now here, because this was resistance, and then it broke above. Now, if it comes back down, that might act as support. You could have a pending order down here maybe to buy if you're looking to buy, but from a better price point. Okay, I'm not saying that's the method you have to take, but if you are in the boat of wanting to buy on gold but from a better price, then this price line down here could make sense if it pulls back to give you that price. And it looks like the momentum is kind of dying off here, and perhaps we'll have a re-strengthening of the USD to give you a better price point if you were looking to buy on gold right now against the US dollar. Okay, so let's say that you wanted to do that. It's very easy to risk manage this trade. I can say execute when price hits. If it comes down to 23.50, I can say then I want it to buy, execute when price hits 23.50. Should say if price hits, right? Not when price hits. Execute if the price reaches 23.50. Then take profit price. Maybe I think leading up to non-farm payroll on Friday, it's got some time until then. Maybe I think this could climb as high as 2,400. And my stop loss then would only have to be if it breaks this support level and drops below 23.48. Maybe I even say it'll have to break both support levels. This one also, which was resistance, went above and became support. This one broke through and became support and went up further. So if it breaks this support level, I'm still in. If it breaks the second one, I'm out. That could be my plan. So if it gets below 23.39, say 23.38, then maybe I'm convinced, okay, it was a bad move, and I'll take my limited loss. So that's 23.38 to get below two support levels. Okay, still look at the risk reward. Okay, I still would be going after about 4 times the profit, a little better than that, than what I'm risking with that type of setup. The way I'm able to do that is by being patient to see if I can pull a better price for the entry price. Okay, that's the benefit of maybe sometimes waiting for a pullback in this case. All right, so now I have to look and see, do I want to risk 4,800? Okay, this is my technical setup. I've got my support and resistance levels. I've got my entry point that I'm shooting for just above the support. I've got my stop loss below 2 support levels. So the prices where I put those exit points for stop loss, entry point for entering on the buy, and my exit point for take profit are based on technical analysis. Okay, a little less on the take profit. We didn't go up to find resistance at 2,400. We're just picking a price at the next round number at 2,400 in this case. Now, with that done, now I have to decide what trade size is right for that technical setup. And if I'm wanting to risk almost 5,000, that's what, 8% or something near that on my balance here. Then okay, but maybe I don't want to risk that much on a trade. I want to risk maybe 1% or something like that. So I can adjust my trade size. If I put 1 lot, now I'm risking 1,200. Okay, I can put whatever trade size I want to try and zero in on the amount I want to risk. So 960, that's maybe 1.5% of my balance. If I get down around 630, that would be 1%. So I can continue to adjust my trade size until I see the level of risk and reward that I'm comfortable with. Okay, so simple process with this order window that helps you risk manage. And so it looks like it's going to be 0.5 and change. And that gets me to about 1% risk with this move. 624 possible loss, balance a little over 63,000. And so that's around a little less than 1% risk on my balance. And my potential profit is over that, okay? About 4 point something times over that. So over 4% potential profit, risking less than 1% with this move, okay? So I can go ahead and click buy on that, and I'm not actually buying yet. It's a pending order, okay? So if I ever want to look at my pending orders, they're here under orders, and it's got my trigger price listed, 23.50. If this drops to 23.50, it will buy, okay? Now, what if you also wanted to risk manage in a different way? Okay, let's say you were interested in gold still, but you didn't want to risk that this could just keep climbing and not pull back. Let's say you were convinced to buy, and again, you could want to sell on gold. I'm not here to tell you should buy on gold right now, but as an example, let's say, again, that you were wanting to buy on gold because you think leading up to Friday, there's expectations of bad jobs numbers, and you think that that could weaken the USD leading up to Friday. So, and you have confirmation of an uptrend here with gold. And so if we start to look at the larger candles, 1 day, 1 week, okay, sure, this is a large climb that it already did, but let me start deleting some of these lines. And now you can take a clean look and see that, you know, it wasn't that long ago that gold was up here at the all-time highs. Okay, you see a clear resistance and down, resistance and down, resistance again. It's not a coincidence at that same price line, and then down again. So here we go with momentum. This is a momentum showing candle. It broke this resistance right here. Okay. This was resistance on 1 day candles, resistance, 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 and look what happened today. That's a breakthrough candle. So on a longer term trade, you could say, okay, my take profit, really what I'm looking to see is if this could come up towards the all-time high around 23.30, 23.22 is well below the all-time high. Now, on our short-term move that we just did, if it triggers the pending order, we said 2,400. Okay, that's way down here. That's being conservative in the bigger picture, that maybe this could reach 2,400. Okay, with a longer term move, looking into Friday and even beyond, gold could push towards the all-time high if there's increased expectation that the U.S. is going to lower interest rates. If that happens, USD could weaken further, and in that case, gold could climb further as a safe haven against a weakening USD. Okay, so with the fundamental backdrop, then we look at the technical analysis and see, okay, this could make sense for a longer move up as well. Now, to get through Friday, I could say, all right, could start climbing now, so I don't want to just go with the pending order. So let me use AvaProtect to get me through a couple days. In case it goes the wrong way, I don't have to worry about putting a stop loss and getting stopped out of the trade. I'll put AvaProtect. I'm completely protected on any negative movement for the protected time period. And then I can let it carry past Friday as well if I want, by adding a stop loss once the protection is ended. Okay, so let me protect this, not just for a few hours, but for a couple days. That gets me to Friday at this time, which means the non-farm payroll announcement already occurred. Okay, I can get all the way through the announcement, completely protected, and I can control the price of that protection with my trade size. So for 1,000, I could have one full lot. It's 100 ounces of gold. I've seen gold move $50 an ounce, $100 an ounce in 1 day's time, or even less than that. So between now and Friday, if something like that happened with a trade size of 100 ounces, if it moved $100 an ounce, that's 100 times 100, right? So it's like $10,000 profit if that happened. And the cost of the protection is 1,000 and change. Okay, so this is the sort of thing when you know there are really big announcements, big news coming, potential for really big movement on something, to have a fraction of that potential profit as a cost for protection could make sense. So this is a unique way to protect trades, to do risk management that's not available anyplace else. Okay, so again, I'm going to stick to my plan of only risking 1% or so per trade. You can risk the amount you want per trade, but if I go 0.6, now my cost is for this protection around 1%, around 1% of my balance. Okay, go 0.55 maybe, get me closer, 0.57. Okay, so 57 ounces. If it goes up $100 an ounce between now and the non-farm payroll announcement, we'd be pushing past this all-time high, right? If we go up to the all-time high, that's about $70 an ounce or so, which would be quite a return as well. Okay, so we could program a take profit and say, okay, if it hits the all-time high or near that, so 24.22, okay, it's up near there, almost 3,500 profit. The cost of this protection, about 600 or so, 626. Okay, so we're talking over 5 times potential profit compared to the cost of the protection. Okay, with a breakthrough candle showing an uptrend, going after a potential take profit that doesn't even have to break the recent highs. Okay, taking profit before those highs. So it's a technical uptrend on the one-day candles. There's a nice breakthrough. Perhaps the fundamentals worked in our favor. We've protected it for very low cost in terms of percent risk on the account, all the way through the non-farm payroll announcement. Okay, if it pulls back, great. We get our pending order in at a better price. If it doesn't pull back and it just keeps running, well, we're in on that already too. Okay, so kind of a split risk management plan, trading in the direction of the technical breakthrough that we see in the technical analysis, and in the direction that maybe the fundamental news in your mind you feel makes sense as well. And I would recommend that each time you take a trade, don't base it just on one thing. You know, don't just base it on technical analysis. Don't base it just on a headline or a story you saw or an announcement from the economic calendar. Try and put all the pieces together and find a situation where you have the technical breakthrough, like in this case. You have an uptrend. You have multiple things in your favor from a technical perspective, larger potential profits, smaller risk because of a preferential entry point, etc. All of that's the technical analysis stuff that we just did. But also, then you're more confident in the trade if you think the fundamental news is on your side, like worse than expected data out of the US causing the USD to weaken, which then helps gold decline, conversely. So this is the process that I'm trying to demonstrate. It isn't that you have to make moves on gold. It's not my point. It's that you go through this process using these tools, the economic calendar. We could have looked at the market buzz as well to look and see if there's any stories on a specific instrument, which we do in tomorrow's session with the fundamental news being focused on more. But combine those tools that are in our web trader and the risk management side of things, which we just did, where you can understand that you're risking a certain amount per trade and diversify with something like AvaProtect, and you know what your potential profits are before you ever take the trade. So you're not guessing on things. And that's just gold. I mean, we could look at other instruments as well, and we also could look at the signals, by the way. So there's a signal on gold. It may or may not agree with what we just did. It does. The signal from Trading Central says buy. So same thing here. If I'm following a technical analysis signal like this, which these come from Trading Central. They've got professional analysts, they do their thing, and they send us, we pay for this service for all of you traders. You don't have to pay for it yourselves. And they send us this information with the support and resistance levels drawn out, just like we did ourselves. You see the pivot line here is the support level. Says as long as it's above that price, they're saying buy. That's the buy scenario here. If it drops below the pivot level, they say then you sell, and you assume the first signal was wrong. And so they always give you the downside and the upside in terms of directionality, but they give you the preferred direction of what they think is happening right now at the top here. So it's a buy signal with a backup plan, sell scenario. If it goes bad, they show you where to put pending orders for potential sells, which would be below this pivot line. You might enter here to sell if it breaks that support level. Otherwise, they say they expect it to climb up here to between 2374 and 2387, okay, in the short term. Okay, this is more of a short-term type prediction that they might expect to occur between now and tomorrow, that sort of thing. Could take longer, or it might not occur at all, right? That's how signals are. But it's about the totality of the information, convincing you if you think in your mind that it's wise to make a trade. And so now we have even one more thing on our side to decide, do we want to buy on gold or sell on gold or something different? You also have the technical signals, okay? And again, I wouldn't use just one thing to decide whether I want to trade or not. Not going to just blindly follow this signal that says buy on gold. I also checked out the economic calendar and saw there's reason why gold would climb from a fundamental news perspective. Okay, I also analyzed my own technical analysis, drawing lines and looking not just at the daily candles that they show here. We looked at the hourly, we looked at the trend, we looked at the support levels and resistance levels, the breakthrough moves for gold in this case, when we drew our own lines. And so now we have confirmatory recommendation from Trading Central as well. Okay, and you see it's been climbing. All right, so the current price is this blue line where it says signal last. This is the live price. So gold's pulling back a bit. Perhaps our pending order gets in. We'll see. But obviously, no trade you take is going to be guaranteed to profit, right? We give that disclaimer when we open the webinar each time. And my point in mentioning that is you can't expect to win every trade, even when you put all the information together. But certainly, you could expect to win more trades by putting all of the information together than you would if you did not look at as much information as possible. Okay, so the idea here is use these tools, use the information that's here, put the tools together to make a strategy like we did, okay, understanding the fundamental news, the technicals, the signal, put that together to decide what to trade on, buy, sell, etc., and then see if that improves your results compared to just kind of guessing what to trade on or only following a signal or only following a headline. And when you work things out with multiple tools to build a strategy, then you can start to hone in on the best combinations of tools that we offer that works for your time of day, for the instruments you like to trade, and start to really perfect the system that works for you. Okay? All right, everybody. Let me pause for a moment to see if there are any questions. I'll give you some time to type any questions. So I'll just pause for a moment here. Okay, Rajat, if I'm pronouncing your name correctly, you're asking to do a kind of a trade setup, and we did that shortly after you requested that with the gold trade. We drew the support and resistance levels. We put the stop loss price on the pending order and on the live move with AvaProtect. So I hope that helped with what you were asking to see. We weren't on 5 and 15-minute candles, but we could have been for a shorter term type move. Okay, so you can replicate what we did on I think we looked at 1-day candles for the longer move and maybe 1 hour, 2 hour candles when we were looking at the shorter move. But if you're more of a scalper taking even shorter term trades, quicker in and out, you follow the same process we did, but on the 5-minute, 15-minute, 30-minute candles, if that's your preference, okay? Just understand the smaller the time frames, the less relevant it is maybe to the fundamental news helping you choose direction. Because even if the direction is obvious from a fundamental perspective on the direction that an instrument will go in terms of its price, if we're only looking at a 5-minute window, it's not so obvious what it will do in that 5 minutes. It becomes more technical based and less fundamental based sometimes in those shorter intervals, unless we're talking right with an announcement. If you're doing announcement trading, come to tomorrow's session. Okay, we show how to do short-term trading with the economic calendar announcements. And that can be on 5-minute, 15-minute, 1 hour, 4 hour, etc. With the announcement trading that I show with the fundamental news, how to trade off of those with the data-driven trading. Okay, we show those types of time frames too, shorter time frames. So tomorrow's session would be good for you. And yes, they're all recorded, Jordan. This session is recorded as well as tomorrow's and last week's and the prior week. So you can go to our YouTube channel and see exactly what I'm talking about for my fundamental analysis webinar. There's some there already showing how to use the tools that I'll show tomorrow. Okay, it's on our YouTube channel for you to go anytime, even if you can't attend the live sessions. Okay, this session will be uploaded by tomorrow to be viewed. Okay, all right, very good questions. I think this is a good place to stop. I think after about 35 minutes or so, you start to lose some focus. And so I think we kind of drove home the point here that there are nice tools here in the platform to help you with your technical analysis, and also to combine that with some of the other tools to build a strategy so that when you're trading and using the technical signals and your own technical analysis on the charts, to find entry points and exit points, you can start to use some of the other tools to help confirm in your mind the directionality as well. Okay. All right, everybody, thank you for joining. Good luck with your trading. The FOMC folks will still be talking this evening out of the US, so that could get some nice movements on the charts to take advantage of. And if you can make it, come to tomorrow's session as well, okay? All right, bye for now. Take care.